Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries. So please keep commenting on our live feed. We'll address your questions before the end of the show. But let's kick start by seeing what the global handover looks like. Wall Street rallied yesterday, led by the tech-heavy Nasdaq, but indices do remain on track to snap a 3-year winning streak and record their worst year since 2008. Stocks in the Asia Pacific opened largely higher on the back of positive cues from Wall Street. SGX Nifty indicates to a higher start for what will be the last trading session of 2022. Is there a correct time and right level to buy IT stocks? We discuss on the show today. Stocks in the spotlight are Eicher Motors, Poonawalla Fincorp, HG Infra and Craftsman Automation. Okay, let's get going and bring on board my colleague Madhuchanda Dey from Moneycontrol Pro to discuss the IT sector. And Madhu, good morning. IT, as we know, has been the flavor of the year, mostly for wrong reasons. It's been a very, very turbulent time. Nifty IT index has shed more than 25% year to date. Talk to us about what happens now. Do you foresee more pain in the next 2 years? Or do you think this is a good level to perhaps start lapping up those heavyweight tech stocks?
As you rightly pointed out, the IT index has been one of the biggest underperformers of the year, shedding by a little over 25% year to date as against a Nifty rally of 5%. So going forward, the key question is what unfolds in 2023. In terms of the commentary from the IT service companies or the enterprises, those are going to get perhaps a little murkier in the days ahead. Because, we have already heard about some kind of caution in the second quarter that is likely to get a tad worse in Q3, in terms of, how budget gets announced, etc. And most of the enterprises after in their, the last quarter result of 2022, in that commentary, they're going to talk about, bracing for a possible recession, a possible hard landing. And as long as this, the war against inflation goes on, lingers on, all these macro noise are going to be dominating the headlines. So the headlines are going to be a lot more scarier than what it was before. But having said that, IT stocks have corrected way too much. And, what we feel, we have done an analysis of the pre-pandemic valuation. And what we see here is anywhere a correction between 5 to 35%, depending on the stocks, which we have listed out in our note. Most of the stocks will be at a reasonably close to pre-pandemic level. And having said that, we must remember that IT, the technology spending is a multi-year cycle, and hence it is, here to stay. So depending on your risk appetite, on your patience, there will be a level when IT will be ripe for accumulation.
But now is not the time, do you think, for accumulation? Do you think 2023 and FY24 could be more painful for IT sector existing investors or the ones who want to perhaps enter right now at these levels?
See, in FY23 so far, we have not seen so much of pain in terms of the numbers. The top line has been more or less protected. Margins were a bit under pressure, but that is easing off. Maybe 24 is where we will see a little bit of demand slowdown, although margin cushion will be there, but little bit of demand slowdown will be there. So numbers could get worse than 23 in 24. But in terms of price performance, a lot of this negative is already in the price. So maybe another 5 to 10% correction. These stocks will throw up interesting opportunity for long-term investors. Having said that, do not expect IT to have a one-way rally. there will
Okay.
be a lot of to and fro movement in the stocks. So, I mean, to trade IT, yeah, if you are an extremely risk-taking investor and you find a bad day and then market bounces back on positive global cues, etc., you could get a short window of trading. But that is not what we are recommending IT today. We are recommending IT for long-term investors on 5 to 10% correction who have the appetite to hold on.
Okay. And since you mentioned that a lot of these IT sector stocks have actually breached pre-pandemic levels on the downside, I know that the note that you guys have published of all the details, it's behind paywall, and we would urge our viewers to also check it out once they subscribe to MC Pro. But any one or two names perhaps that you can share with us that look promising, not only from a fundamental standpoint but also from a valuation angle, which have corrected a fair bit and perhaps look attractive right now?
See, stocks have not yet come down to pre-pandemic level. For instance, if I talk about the bellwether, which is TCS, it is still about 5-6% away from the pre-pandemic level, and that is across the board. Mid-cap stocks obviously had rallied more in terms of the pandemic when the initial IT rally started, and they have performed way better than the large caps. So in terms of correction also, they have corrected a lot more. But yeah, there are stocks like, say for instance, I could name just one of the stocks which we have been highlighting quite a bit. Coforge, for instance, has corrected quite a bit. It is now close to its, whisker away from its pre-pandemic valuation. So maybe another couple of bad days, and it would come to a level where it will be ripe for a gradual accumulation. Having said that, our standard advice is, accumulate gradually on correction, and don't go full throttle in one go.
Well, Madhu, thanks on that note for joining in and sharing with us, what's going on in the IT space and how things could shape up in the fresh new year as well for 2023. Okay, let's bring on board our next guest, Raja Venkatraman from Neo Trader, to talk about the technicals of the market. Hi, Raja. Morning. Before we talk about the index, I want to also draw your attention to Nifty IT. What kind of a trajectory do you foresee in the next few months? Will things be as painful for the IT space on the going by the technicals in the fresh new year as well?
Yeah, good morning, Karunya. The entire IT space has been definitely attracting some attention, especially after 2021 strong performance. But what has happened is ever since the strong decline emerged at the start of 2022, the entire IT sector has been primarily range bound. But what has been heartening as far as the IT traders or IT investors are concerned is that we are seeing a higher low being formed, which is a signal that probably there is some recovery in space. Now, when you see the kind of movement which you saw from the start of this month, I find that the IT sector is showing some signs of bottoming out, and considering the kind of volatility which we are seeing, I find that IT sector could be a good space to initiate some longs now, because we are reaching a good period of consolidation. The sector is forming a higher low, and over the last few days, it has really formed a strong set of support. So if you are looking to initiate some longs, IT would be definitely the sector.
All right. Okay, that's interesting to know. Today also the final trading session for the year. So what should we expect? I mean, after yesterday's fantastic turnaround that we saw on the benchmarks, almost a 200-point recovery from, sub 18K levels for the Nifty. Do you foresee any substantial action today, or will it going to be a slow, steady and sort of lackluster trade given that everybody is now in the party mood?
Yeah, I definitely agree with you. The last word, the party mood. Market definitely is having a party mood where it's having its own say, and what we are seeing right now is generally the option sellers. That's what is the trend right now, and option sellers on either side of the table are having nightmarish day, to be precise. What is the reason is that the entire markets is generally in an upward bias. I continue to maintain that, and every pullback seems to be a very good opportunity to buy into. Now, when I take a look at the option data, I find that the Nifty has made a very good support zone around 18,000 levels. So, as long as the you see a decisive weekly closing below 18,000, I don't envisage that we should be considering the market to turn into a bearish bias. Instead, the dip should be bought into. Now, between the Nifty and Bank Nifty, I find that the Bank Nifty has definitely a better amount of put writing, which is an indication that a strong bullish bias is envisaged. So I expect that the Bank Nifty would take center stage. It's going to be an action-packed day once again because market is expected to open with an upside gap. Let's see if it sustains. But then the overall bias will remain bullish. But people who are having a mindset of bearish bias would look to cover because it's the last trading day of the week and also of the year. So people do not want any overhang to spoil their party mood. So they would definitely look to cover. So I feel that there could be a continued bullish bias. We could see Bank Nifty heading towards 43,500 to 600 at least for the day, and Nifty could head towards 18,400. That's what are the levels which I'm expecting for the day. But overall, the market remains a bullish bias, and every dip should be used to buy into.
Okay, all right. That's interesting to note. In fact, I'm sure that's exactly what's happening as well. Every time the market corrects a fair bit, we're seeing a very smart rebound happening, sometimes in the very same trading session and sometimes the very next day. Let's talk about some individual names as well, which could be in the limelight today on back of news flow. Now, I want to bring to your attention to Eicher Motors. They're making a strategic investment of 50 million euros in a Spanish company called Stark Future. What Eicher essentially is planning is a long-term strategic partnership for collaborative R&D in electric motorcycles and technology sharing. Let's understand how Eicher's chart is also playing out and whether or not it looks attractive, because we've seen a very strong run-up come by in OEMs in a large part of the year so far. Let's talk about what lies ahead now from these levels. Eicher Motors, what do you think, Raja?
Yeah, see, Eicher Motor had a very good run at the start of the year, almost till the, two-thirds of the year, the run was very good. But now what I envisage is that the stock is continuing to be in some bit of pressure at the moment. So what I would wager is that now it needs to really move above 3,400 levels and give a strong closing. Yesterday too, the stock showed a fair amount of rise, probably triggered because of this news was already factored in. So what I feel is that for the prices to go up, it would need more leg up. So at this current moment, one should wait and watch Eicher and not trade into it at the moment.
Okay, all right. So wait and watch for Eicher. The next stock on our list is Poonawalla Fincorp. The promoter Rising Sun Holdings has bought additional 2.2% stake, and now their holding stands at 62.1% versus 59.9% earlier. Now let's talk about Poonawalla Fincorp again. Most technical analysts we've spoken to in the last couple of weeks have been rather optimistic. Even yesterday, despite the market weakness in the early part of the session, Poonawalla looked resilient. Talk to us about where it's headed from these levels now.
Yeah, the overall prospects of the stocks are definitely encouraging. The stock definitely had a very strong decline in the last 2 months, but then the stock found some good supports around the 240 to 235 levels, and from there on the rebound has been quite encouraging. But now what it could run into is some sort of resistance which is around 330. So if you are a short-term player, then you could expect a target zone of around 325. But then if you are looking to invest, then you have to wait for the levels of 325 to exceed. Having said that, one could take it as a two-pronged play. One could participate and then exit some at 325 levels and continue further, because from 325, I expect a target of around 600 within the next 1 year.
Okay, all right. The next name I want to flag off is HG Infra Engineering. They've backed a road project from National Highways Authority. The project cost is close to 1,000 crore rupees. They will be constructing a 6-lane greenfield Karnal ring road under Bharatmala Pariyojana in Haryana. Now let's talk about HG Infra. It did reach those, very, very exciting levels of 630 plus. Last 1 month it has retreated a fair bit. In fact, last 2 weeks it has retreated a fair bit. Right now perched at 575. Good time to enter, or do you foresee some more pain or consolidation before it again bounces back?
Yeah, you rightly used the word consolidation because that's what the stock has been going through. The stock has been actually coiling. There has been brief inflows of some positive triggers, but they have not been helping the prices to scale up. And as a result, a brief upside is witnessing some bit of supply right now. So I would still wait for a level of around 650 to be exceeded before I really take an entry into this counter.
Okay. All right, and the final name as far as stocks in spotlight is concerned is Craftsman Automation. They're looking to buy 76% stake in aluminum cylinder heads manufacturing company. It's called DR Axion India. They'll be buying the stake for 375 crore rupees, and post the transaction, DR Axion will become a subsidiary of the company, and they plan to complete this deal, close the transaction by 31st March 2023. How's Craftsman Auto looking? It's been a steady mover last, 3 months. If we look at the chart, it has gained a fair bit from, 2,700 levels to now almost 500 rupees or more on the upside. Good time to look at a Craftsman Auto?
Yeah, so this stock has been a very good performer. It has managed to stem the tide, and it has been continuously inching higher. So this stock is a good buy as an investment play for at the current levels, also on say a pullback towards 3,000 levels, because the overall momentum and trajectory is definitely to the upside. Now, considering the way the market is placed, a pullback approach could be adopted so that your risk could be minimized. So the pullback levels is around 3,000.
Okay, all right. Let's also talk about some queries that are coming in on our live feed. We were talking about IT sector in the starting of the conversation. If you could tell us, how is Wipro's chart looking? Satyendra is writing to us and wants to know more about investing in Wipro at these levels.
Yeah, so see, now if you're looking to really invest into the IT space, so Wipro definitely offers us a cheaper proposition. But then what I have found is that the momentum in Wipro doesn't seem to be inching any higher. It's just that it's going to spend a lot of time in consolidation. While I do promote the philosophy that yes, IT has come into a good set of supports, it still does not take away the fact that at rallies you're going to experience some supply. So now Wipro could be late to the party. So instead, go to the second tier IT stocks like say LTTS or LTIM, which will actually give you a better bang for the buck, because that's what I see in these stocks. So like for example, earlier the guest also spoke about Coforge. So Coforge is another counter which I like to track and participate, because that's setting up for some good upside. So I would look at LTTS, LTIM, Coforge and Dixon from the IT space for participating on the long side.
Okay, all right. What about Chemcon? Chirag is asking us for your view here. Now, this one also, last couple of sessions have been, in fact, last 1 week has been quite strong, adding about 18 to 20 rupees on the upside. Do you think the momentum could sustain?
The problem is that specialty chemical as a sector has really not been able to drive up some momentum. But the thing is that people are still expecting the earlier specialty chemical phase to continue. So right now we are undergoing some bit of consolidation in that sector. So I would advise to look at some other emerging sectors or some other sectors which are more stable at this current juncture to participate.
Okay. I want to address the third and final query for the day. Parag is writing to us and he wants your advice on Canara Bank. Now, we all have witnessed the surge in PSU banking stocks over the last 1.5 months. Now, Canara Bank, do you think has more legs to the rally?
Yeah, Canara Bank definitely has surprised the street and surprised many people out there. And I continue to believe that PSU banks are the ones who are actually helping the Bank Nifty scale up this kind of momentum. So now any dips in Canara Bank should be bought into. Sorry, the rise has been quite prolific, but then I feel that the momentum is still there and it could head up towards 430 levels within the next 3 months.
Okay, all right. Thanks for that. And Raja, before we let you go, what are your favorites in the market right now? What stocks will you be keeping on your radar?
So, what I would like to go ahead with is a buy in JSW Steel, considering the current metal trends at current levels, with a stop at 757 for an upside towards 785 and 795. And a buy in Apollo Tires at around 327 with a stop at 322 for an upside of 333 and 336.
Okay, all right. Thanks for flagging those off for us and our viewers. And before we let you go, from all of us at Moneycontrol, Raja, wish you a very happy 2023. Party hard, and we'll see you next week. And guys, same goes for you. We conclude the final episode, final edition of Morning Trade for the year. Thank you so much for tuning in. We'll see you next year.
Wishing you all and at Moneycontrol team a very happy new year from us at New Trader.